I'm not saying President Trump is going to put the dollar back on the gold standard, but it's a possibility. And with that in mind, I'm still trying to keep stacking, not just because of this potential eventuality, but for the fact that gold will always be insurance and stability versus currency debasement. If he gets reelected, that will be the way forward. So whatever happens in terms of the dollar, the election, BRICS, even if this weren't to happen, backing Humpty Dumpty with gold, I think gold is still the place to be. Am I saying gold is going to go to 27,609? No, but I think it will have to go a lot higher to back an honest system.
Since 1972, the US dollar has fallen by 99% against gold and lost 90% of the purchasing power of real goods and services. On Saturday, former U.S. President Donald Trump pledged to make it too costly for countries to shift away from using the U.S. dollar, adding a new pillar to his tariff platform. Trump, who has long embraced protectionist trade policies, said the dollar has been under major siege for 8 years. At last year's summit, China, India, Brazil, Russia, and South Africa discussed de-dollarisation. By contrast, Trump has said he wants the dollar to remain the world's reserve currency, a pledge he renewed at Saturday's rally. Global financial analyst Mario Innecco suggests that the U.S. might need to back the dollar with gold through the Federal Reserve to stabilize it. However, he predicts that gold must rise significantly to support a credible financial system. While reflecting on current trends, Mario Innecco emphasizes that President Trump's focus on sanctions is problematic despite his call for international cooperation. Meanwhile, he predicts that these sanctions will drive the expansion of BRICS countries. Amid the growing ranks and strength of the BRICS bloc and talk of de-dollarization, reports indicate that two of the group's largest members, Russia and India, have already opened covert channels for trade as a workaround to U.S. sanctions. Donald Trump, the Republican candidate for U.S. president, has promised to lift all sanctions on Russia if re-elected. This comes after the Justice Department charged his former advisor, Dmitry Sims, and Sims' wife, with working for Russian state media. Highlighting the U.S.'s ballooning debt and deficits, Mario warns that these issues erode the dollar's reliability. He suggests restoring confidence would require aligning the dollar with gold, as evidenced by the significant gold accumulation of the BRICS. Now, we present the clips of Mario Innecco's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
President Trump is partly right that you have to cooperate with all the countries in the world if you want to really reinstate or get the dollar back on its feet. But the fact that he still thinks they should use sanctions, but not so much, it's still not good, because it's one of the reasons why the BRICS have been expanding and why there's so much interest in joining the BRICS. Because if you join the BRICS, you're pretty much unequal. Yes, I know there are countries like China who are probably going to be dominant, but it's a club where everyone is equal, where there's no one bossing people around, I would say. Yes, it could be something naive to say, but I think the fact that President Trump still wants to use sanctions is not gonna gel well with other countries outside NATO or the U.S. sphere of influence for now. And what's the other reason why I think the dollar, the fiat dollar that is, or Humpty Dumpty, cannot be put back on the wall? Well, it's got more to do with the debt, the finances of the U.S., and the fact that it's going to be very hard to contain costs of financing. The government is out of control. Even under President Trump, the debt went ballistic as well. For example, he was running 5% budget deficits in 2019. In 2020, it was even worse when we had the COVID event. So I think, unfortunately, the world sees this, and they see that the dollar is not just not reliable because of politics and sanctions, but also because it's not a good store of value anymore. So the only way, in my opinion, that is if Humpty Dumpty is transformed into a gold Humpty Dumpty. I think it will be good for the whole world. And I think BRICS knows this. All the countries in the so-called global south are accumulating gold hand over fist. So what would the United States need to do? And I guess they'd probably have to use the Fed to make sure that the dollar was as good as gold. So 40% gold backing. What would be a way to back the dollar or the currency 40% gold? The Fed starts QE, but instead of buying treasuries and mortgage-backed securities, they buy gold. And they drive the price up to a level where it covers the M1, let's say, which is currency in circulations and bank deposits, to a level where the gold that the U.S. Treasury holds represents 40% of M1, and M1 is at 18,053 billion, or just over $18 trillion. 40% of that, I'll tell you here, I did the calculation. 40% of that is 7.22 trillion. And U.S. gold reserves, well, it's just over 8,000 metric tons, or 261.5 million troy ounces. If you back the 7.22 trillion of M1 with the gold that the U.S. has, the price is to be driven up to, I'll tell you here, $27,609. So am I saying that's where gold's going to go? Not necessarily. And why do I think they have to back the dollar by gold?
From a technical perspective, Mario Innecco discusses the weaker than expected non-farm payroll numbers and the Fed's potential rate cut. He highlights the recent inversion of the 2 to 10-year yield curve, which, after being inverted for over 2 years, is now positive, suggesting a 75% chance of recession by early next year. The 10-year U.S. Treasury yield was about 3.70% Friday afternoon, while the 2-year U.S. Treasury yield was 3.66%. Several times this week, the yield curve has flipped between positive and negative territory. According to Interactive Brokers senior economist Jose Torres, investors should pay close attention to the disinversion of the yield curve because of its long-term track record of predicting recessions. Despite the poor market reaction, gold and silver continue to perform well, with gold up 21% year-to-date. Mario expresses confidence that both metals will maintain strong performance despite ongoing market volatility. Let's get back to the interview.
Well, we had the non-farm payroll numbers. It was a little weaker than expected. I think 142,000. The consensus was for a number around 165. And also the previous number was revised down from, I think, 114 to 89,000. Unemployment rate dropped from 4.3 to 4.2. But all in all, I think the market is screaming for a Fed rate cut. Yesterday, there were a couple of Fed presidents who made comments. One said that we need 50 basis points rate cut on the 18th of September. And then the other said 25. We're not really sure, and the market's not that sure. I think the next few weeks and the data will determine that. And one thing that happened that was quite significant after yesterday's action in the markets is that the 2-10s yield curve spread, well, disinverted for good for the first time, well, I'll tell you here, since July 2022. So it was inverted for over 2 years, which is the longest period it's been inverted, I think, since the Great Depression, the early 30s. And as you can see by this chart here, it closed up 6 basis points to the good. I mean positive, which means the 10-year is yielding more than the 2 years, as it normally should. And why? Well, because it should. You should get more for your money if you lend it for 10 years than you do for 2. As you can see from this chart, 3 out of 4 times, the economy goes into recession 4 months after the curve disinverts or uninverts. So if you calculate 6th of September, well, the economy has a 75% chance of being in a recession by the beginning of next year, which is quite interesting. Yes, one time it took 9 months I think that was from the '07 to the '08 events. The other thing is that the markets didn't really react very well, and the Dow, S&P, and NASDAQ had the worst week, I think, since March 2023. So, the NASDAQ finished down almost 6%. And year to date, the NASDAQ, S&P, and Dow are up, but not as much as gold. Gold just finished below 2,500, I think around 24.97. Gold's up 21% year to date. The S&P is up 13.39% year to date. The Dow 7.05, and the NASDAQ 11.19. And also silver. Silver is outperforming the indices. So I think gold and silver are going to continue to perform well. Some people are concerned about the market volatility, but I wouldn't be.
The dollar's share of global reserves has declined gradually over the past 20 years as central banks diversified their holdings, mostly into gold. As investors and nations move to gold for stability, its role in global reserves may increase, driving its price. How do you think Mario Innecco's proposal to back the US dollar with gold will influence gold prices and investor behavior in the coming months? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.